On today's episode, we are going to take a look at 4 stocks that I recently purchased because I believe they are a great investment. All 4 of these are in different markets. They're all in different market size. One of them is less than $1 billion. But one thing's for sure, they're all going to have a strong balance sheet. They all have strong future growth. And they're all in markets that I believe will continue to grow. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and follow me on Twitch, where I live stream taking a look at stocks you want me to look at. So let's get started. If you guys have been watching the channel, you guys know I'm an electrical engineer, very bullish in the semiconductor industry, very bullish in the artificial intelligence and the high performance computing. So the first stock is going to be one that's hitting those markets. The first company we're going to take a look at is One Stop System. So One Stop System creates these building blocks and solutions for these high performance computing. So they have different modules. They have modules, for example, memory. They have modules for GPU accelerators. They have modules for servers. And most of these modules are used in the data center, right? In the data center, you need to have GPU accelerators. You need to have storage accelerators. But there's a big competition in this market, right? There's a lot of people that create these types of modules. We have like Dell, HPC. So what makes One Stop System different? One Stop System is different because the way they create their modules are meant for ruggedized environments, for vibrating environments, for environments that are constantly moving. Where the ones these other competitors make, it's more for just a data center, a building that's not experiencing any form of movements. So the types of applications that these modules can go are, for example, the military space, where there's a lot of movements. In commercial aircraft, with all the information and entertainment system these aircrafts have on board, you need to have storage, a crazy amount of storage modules for that. So in commercial aircraft, in the medical field, in autonomous vehicles. And the great thing also is that obviously the first perk that they have is that it's ruggedized. So they're able to go into movement speed. But there's also another perk to having them closer to your system. Because if you have all this high performance computing in the cloud, it's going to take some time for you to send that data from your equipment to the cloud. So obviously it's super fast, it's in a blink of an eye, but applications like this need that answer at real time, right? They can't wait that millisecond, that small fraction of a second to get the information back. So by having the power of the cloud already inside the equipment, it allows them to do it in real-time solutions. So obviously for autonomous vehicle, a split second can mean a life or death situation. Same for the military, same for the medical. Imagine something goes wrong and the medical system needs to make that solution right away. So here we can see military program wins by One Stop System. So the great thing about One Stop System is they're completely customizable, right? So it doesn't matter who's the big GPU winner. It doesn't matter who's the big storage winner. So their systems or solutions work with any types of GPUs in the main market. So you can either pick an NVIDIA GPU or an AMD GPU. Same with CPUs for the servers. Same for data storage. You can pick whoever the leading data storage maker is at the moment. All right, so if you guys are excited about One Stop System, it is traded under the NASDAQ as ticker OSS, currently sitting at $7.69 with a market cap of $141 million, super small. This is in headquarters in the United States, which is good because it allows them to have those military advantages. So certain military programs won't work unless you are producing everything here in the United States. So I first talked about One Stop System in December, and since then, since my initial buy, I have gone up over 100%. Even after those type of returns, I am super excited, and I bought recently. If you want to ever check out my buys, make sure to check out my Discord channel. I post every time I buy and sell, and it's free for anybody that wants to join. From its all-time highs, the stock is down about 15.4%. But for the past 6 months, it is up over 241%. If we take a look at future growth, this company is only expected to grow 6.4% on average for the next 3 to 5 years. So analysts believe this is going to be not a hyper growth stock. I don't know. I just have this feeling because of the market it's hitting and the overall expansion of this technology that this is kind of underestimating it. We can see the company is profitable right now, and they also are positive in cash flow from operations. They were affected because of COVID situation, right? A lot of places were closed down, especially here in the United States as well. So now if we take a look at One Stop Systems balance sheet, if you look at it, it might not look that great. They have almost a 1-to-1 ratio of debt to cash, but remember, they are profitable. Remember, they do have positive cash flow from operations. What I do like is, even though they do have that debt is mainly from that PPP loans that the overall U.S. government gave. So that's a very low interest loans, and if they used it for the correct reasons, it can actually be forgiven in the future. So that debt might go away, and if it doesn't, it's going to be at a very low interest rate. So that's the first stock we're going to take a look at. The second stock we're going to take a look at is Magnite, and again, I'm hitting different markets. I'm talking about companies in different markets. Magnite is one in the advertisement platform world. Something very similar to like Trade Desk, something very similar to APPS, which have been very, very popular in the overall industry or the fintech community. So Magnite helps with both the buyers and the sellers. And what do you mean the buyers and sellers of advertisements? Let's say you own a platform like Disney and Disney Plus and Hulu, and you have advertisements within that platform. You are a seller. You're selling your ad space to people who want to buy it. The buyers are whoever wants to advertise in your platform. So Magnite works with them. Magnite has also been very aggressive with acquisitions, and that's what I like to see, a company that's being aggressive to continue to grow their overall market. They recently just acquired SpotX, and this deal creates the largest independent CTV, which is connected TVs, advertisement platform. So that's insane. Magnite has become crazy monster overnight. Another thing, Magnite just announced a closing of offering of about $400 million in convertible notes. This was closer to like about $45. So Magnite right now is traded under the NASDAQ as ticker MGNI. It is currently sitting at $50.68. It has a market cap of $5.86 billion. We can see very, very small company for sure as well. Not as small as One Stop System. In the past 6 months, it has given great return to investors, about 726%. Right now, we're seeing the online advertisement business really booming right now. So the stock price is following that. Before their acquisition, their revenue grew about 20% for Q4 compared to the same time last year. They are profitable with adjusted EBITDA earnings, but I don't think they are profitable in GAAP earnings. With margins of about 37%, they are profitable in free cash flow. If they take a look at adjusted EBITDA, again, they're not GAAP free cash flow positive at the moment. They expect strong revenue growth for the next year. Now with these recent acquisitions, they're continuing to grow, and they're also raising their adjusted EBITDA margins to target between 30 to 35%. So they're going to have very, very high profitable margins. They also just recently renewed their Disney and Hulu contract for another 18 months. So those are some big players hitting that they're working with. Magnite right now is expected to grow its revenue 22% on average for the next 3 to 5 years. Like I mentioned, right now the company is not GAAP profitable. They're also not GAAP cash flow from operation positive, but they're almost there. And for the next year, they are expected to be profitable. If we take a look at their current balance sheet, obviously not taking a look at their recent public offering, they have plenty of cash with no debt at the moment. So Magnite is looking really good to me as well. And before we take a look at the third company right now, I want to show you guys a video I just did yesterday on a growth company that has dropped over 40% from its all-time highs. And I do believe it might be giving us some form of buying opportunity. So make sure to click that video. The link should be up here. So the third company we're going to take a look at is Twilio. Like I mentioned, I've talked about this one before. They have a cloud communication platform. This is the building blocks to add messaging, voice, video into your web, into your mobile application, even authentication as well. So the great thing is, if you are developing an app, if you're developing something, you don't have to develop this process of adding this to your application. You can just go to Twilio and pay them for it because they've already done the back work for you. They have a lot of great customers. This is something I haven't talked about before. They have, for example, Lyft, Airbnb, Shopify, Uber, Instacart. So whenever you, example, order a Lyft and you get some form of message, it's most likely being backed out by Twilio. If you want to contact with them, the way their overall communication is going on is being worked on with Twilio. Then there's other brands like Netflix in the technology. If you have the phone in your application, right, when you get the alert from your phone that says, hey, there's a new system, there's a new movie you might watch right now, or new movies that just got released that's coming from their application. maybe even via email. Stuff like that could be working behind the Twilio's platform. They have Zendesk, Twitter, Spotify, Yelp. So they have some big players, LendingTree, Mercado Libre, Lululemon, eBay. So we can see they have a huge backlog of great customers. Right now, Twilio is traded under the New York Stock Exchange as ticker TWLO. It's currently sitting at $355. It has a market cap of 60 billion, right? Like I mentioned, all different markets, all different sizes. In the past 6 months, the stock has gone up about 50%. But since its all-time highs, the stock is down about 20%. I really do love these corrections. I really like when things start to pull back. In their most recent earnings, their revenue grew 65%, and their expected revenue growth for the full year to grow about 44 to 47%. This is, again, a crazy growth company. If we take a look at analysts believe this company will grow its revenue 22.4% on average for the next 3 to 5 years. That is a huge growth company. Unfortunately, they're not profitable right now, but they are barely positive in cash flow from operations. If we take a look at their most recent balance sheet, they have plenty of cash at hand compared to debt. Since they are positive cash flow from operations, it allows me to be a little less hard on their balance sheet, so I am really enjoying Twilio. The final company we're going to take a look at is Upwork. Now we're gonna see this type of freelancing type marketplace. So all different markets. Upwork, if you are familiar with Fiverr, is the same thing as Upwork. They allow freelancers to find the jobs, but the great thing is they also allow companies to look for employees through Upwork. Some of their customers right now are like Microsoft, Airbnb, General Electric, GoDaddy are just some of them. If we take a look at Upwork at a glance, in 2020, their revenues grew about 24% for the full year. Their gross service volume grew about 21%. So by seeing this gross service volume increasing, it either means two things. It means either more people are using it or the transactions are getting bigger, and both of those are great news for Upwork. They are profitable in adjusted EBITDA. I don't think they're profitable in GAAP earnings. So the way Upwork makes its money is just like any other marketplace, right? When it connects a buyer and a seller, so a freelancer to someone that's looking for a job or someone who needs a people and is connecting it to a freelancer, they charge a fee once the payment happens. So right now, the freelancers they say are highly qualified. Over 73% of them have a college degree. Over 21% are postgraduate degree. If you take a look at their clients are mainly 80% small businesses, small to medium businesses, because some of these small businesses, they have less than 10 employees and they're trying to just find some people to help them out on a small project. They also 20% are actually mid-market and large accounts like Microsoft, like General Electric, like GoDaddy. So they have some big players behind them. Another thing I like about Upwork is that it allows you to just search within domestic. There's certain companies that only want to work within the country they're residing in, and Upwork does that as well. So Upwork is traded under the NASDAQ as ticker UPWK. It's currently sitting at $45.47, and it has a market cap of about $5.6 billion. In the past 6 months, the stock is up about 200%. So congratulations to all investors. And from its all-time highs, the stock is down about 20%. Again, I am loving corrections. Future analysts expect this company to grow 20% on average for the next 2 to 5 years. They're also expecting strong revenue growth. Unfortunately, the company is not expected to be GAAP profitable until like 2023. So that's about 2 years from now. But the company is positive in cash flow from operations, and you can call me Mr. Wonderful. Cash flow is where it's at. If we take a look at financial health, this company is very strong. They have plenty of cash at hands compared to very low debt. So like I mentioned, today we took a look at 4 companies, all hitting different markets, all have seen a nice recent correction. And these are ones I recently purchased because I believe they are a great investment. One thing though is none of these are a tier 1 stock for me. I would say these are all tier 2 stocks. And tier 1 and tier 2, like tier 1s, I only have 4 stocks. I've done a video on them. I should actually post a link right here on my tier 1 stocks. These are the 4 stocks that hold a good portion of my portfolio. These 4, I believe, hold over 30% of my portfolio. These, which I call tier 2, are a smaller portion, but still ones I want to enjoy and want to continue to grow. And in all honesty, all these are pretty high in that list too. So I'm going to continue to add to these in the upcoming weeks. Unfortunately, I don't have unlimited funds, so I can't just put big funds at once. I put money to work every single week, probably like most of you guys, right? And every week I'm looking for stocks to invest in. Most of the time I add to current positions, but there are times when I add to new positions. So I hope you guys enjoyed today's episode. Make sure to subscribe. Take care. Have a good night and see you next time.